Sorry, guys.
We're live.
Cool. Let's do it.
Hey, everybody, what's up? Sorry for that little dress rehearsal of a mistake right there. My name is Shay Rodriguez, and I'm here with, you probably heard already, my new friend, Brandon,
Yep.
who I've been calling Chubbs, by the way.
That's fine.
And
Everybody
it's cool.
calls me
Okay.
that. Yeah.
Brandon of Captain Partners,
Mhm.
who invited me to sit down with you and chop it up and really break down Captain Partners, athletes and investing,
Mhm.
investments, and shout out to Comcast Sports.
Comcast Sports for letting us have this
Yes,
opportunity.
definitely,
For
definitely. It's Atlanta startup.
sure. Mhm.
This is new for me. Is it new,
New
for
for me
you?
as well, emerging
Yes.
fund manager. So
Yes,
first time in this
yes.
space.
Okay, and we're talking money, so I think that's a good conversation.
Hmm.
Talk to me about Captain Partners. If you could give me a one-liner, you know that famous like elevator
Yeah.
cliche elevator speech. Talk to me about Captain Partners in one line.
Yeah. So in one line,
Yes.
Captain Partners is an alternative investment firm that invests in tech in the sports, entertainment, and media industry where we can add value as a firm.
Okay, one line. That was I think that was
Yeah,
a good
I've
one
been
line.
practicing that a lot.
Yeah.
So.
You know what I love about our generation?
Mhm.
We use these like catchy words to like separate us from, I guess, each other and make us stand out from the pack.
Hmm.
And you threw out the word alternative
Hmm.
before investment firm.
Yep.
What does that mean? What's that like that little tweak of a word
Right.
that can change the definition of anything? What does that mean?
Right. So alternative investments is just an asset class. So you think of the stock market, you think of investing, whether that's real estate, whatever it may be. Alternative investments is just that asset allocation of not your typical investment. So that's private equities, which is buyout funds, or venture capital, which is what we're in, and being able to actually get into an asset class that doesn't have the same risk reward portfolio or profile as all these other investments do, but also has higher returns, but also higher risk. So just being able to be in that class and in a different space than the stock market or the S&P 500 is kind of what that alternative means.
You know, I hear high risk.
Mm-hmm.
I hear high return, but I hear high risk.
Yeah.
I hear high risk first, probably.
I think everybody hears high risk first, for
yes.
sure.
A little pessimistic, especially when it comes to money, right?
Mm-hmm.
So, in that vein, what makes you qualified to have Captain Partners as a firm and to really be in this space and to even talk on this platform about your firm, Captain Partners?
That's a great question. So to start, I went to Wake Forest University, and when I was at Wake, I just took note of people around me, people who I had conversations with, people who I was in classrooms with, people who I talked to and just thought differently, right? And thought maybe in a way that I wasn't thinking as a kid coming from Marietta, Georgia, a football player. And that's kind of what Captain Partners encompasses, right? So Captain Partners, all five of my partners were captains at Wake Forest with me.
Yeah.
So when you think of captain as being named the captain of your team, it's a high honor because you're voted on by your colleagues, your peers, your coaches, and it means you exude leadership. You're always looked on. You're kind of the big brother of the team, right? You have a work ethic unlike somebody that is a freshman or somebody who's not playing, right? So you exude all these qualities, and that was the biggest thing for me. And then you put on top of that, I picked the 4 or 5 smartest guys that I know, right?
Mhm.
So everybody in Captain Partners that's involved is smarter than me, and that makes me feel great, right? It's
Okay.
very comforting for me. But we also think differently. So I was an econ major. I think of supply and demand and how the world works. Where my other partner is an M&A person for a spine company, and so he thinks in mergers and acquisitions and how can we make this company valuable by adding ourselves or acquiring them. And then we have another guy who's George Doctor from UVA, and so he thinks in kind of the legal space, and so everybody thinks differently. And when you have all 5 of these diverse minds, and everybody has a different branch of thinking, and you put those together, you have one big powerful. I look at it as one big powerful brain, right? And that's an expert in each area that you need to be an expert in. And so, to your question of being qualified, I think that's one reason, right? And then just me as a person, when people invest in me or invest in Captain Partners, me as the fund manager and the managing partner, they're investing in Brandon Chubb when it comes down to it, right? Because you said high risk, that's the first thing you heard. So what is going to mitigate my risk? And so you got to put your trust in me personally, knowing that my character and all these things that about me and our relationship, that's going to be the basis of one, this investment, right? But two, knowing me and my work ethic and just how I can make connections I think gives a little risk mitigation as well, right? And then lastly, we co-invest in our deals, especially as an early emerging fund. So I'm not just going out and finding the first deal somebody sends me in the email, right? It's me being able to partner with Harris Blitzer, Sports and Entertainment, or other top VC funds and getting their deal flow invested in it. They did a lot of due diligence. They had the investment rooms and whatever, and that kind of mitigates our risk as well, right? So we're giving access to some of these top deals that a normal person just couldn't get access to, just because they're rich or they have a lot of money or because they throw a lot of touchdowns. It doesn't matter. It's all about supply and demand and being able to get access to high quality deals. Because even Uber, Facebook, Amazon, they were all risky too, right? Yeah. They were all risky investments when people invested in them. Netflix was a risky investment, and it just happened to turn out the way they did. So we want to be the same way.
You know, I like the idea of everyone winning, but especially losing money together. Like, if I'm going to give you my money, I want to know that you're also, you know, in this and investing in this as well. I want to circle back to something that you said. You said you feel like the people that you're partnered with in Captain Partners, the 5 of you guys, the other 4 people are smarter than you.
Yeah.
What does that feel like, walking into a room with your colleagues and selecting them and knowing that, okay, they have my back, but not only do they have my back, but I trust them to see farther than me?
That's a great question, because that's not easy to do, right?
Mm-hmm.
As an entrepreneur, when you start a business, first thing that's always in the back of your mind is, how can I protect myself so nobody copies me? How can I protect myself so nobody replaces me or takes over or you know, with competition and all that. And so when you think about putting the smartest people around you, that thought can come up, you know, in the back of your head a lot if you're not secure in what you're doing in the foundation and the character of people you put together. And so being vulnerable and saying, hey, like, I'm not the smartest guy in the room. Neither do I want to be, right? But also that you think differently, she thinks differently, he thinks differently, and collectively we can all do something for the greater good, right? And have a greater cause and amplify it and have better execution than if one of us did it, or if we're competing and trying to be the smartest guy in the room, right? Or, you know, I could easily say, hey, like, I don't like that idea because I think it, you know, undermines me or undermines somebody else. And right. And so just and that comes with being a captain, right? Being a leader and really understanding that you got to first get the right people on the bus and then put the GPS in, right? And not the other way around. So it gives me reassuring confidence in just Captain Partners as a whole and the investments we make. Because like you said, we're using other people's money. So at the end of the day, I got to be able to go to sleep knowing that I put X, Y, and Z's money in the right fund, even if it doesn't work out because it's high risk, that I can sleep and really back that up if it doesn't work out. And all these people are, you know, especially as a new firm, all these people are people who are connected to me. So I'm, you know, going out to high net worth individuals in my network, athletes in my network, business execs in my network. And I'm asking, you got to save your bullets, right? I'm asking for that one bullet out of, you know, maybe 5 in my lifetime that I would get from that one person. So I want to make sure it's the best bullet I can use, right? And even, like I said, if I miss the target or if this fails or if it doesn't work out, I can tell you, you know, with confidence that I tried my best. I did the best I could. And I put faith, you know, put my faith in it by putting my own skin in the game as well.
When you and your other partners come together to make a decision on something, and we're going to touch on this a little bit more, but I don't want to overlook this. How do you guys decide if there's a split decision, if it's 2 and 3, or if it's 2 and 2 and one's in the middle, kind of like, you know, I really don't know. Are you wooing that other person? You taking them out to brunch? What are you doing to get everybody on your side here?
Right. That's a great question too. And that goes with being a captain and being a leader and really having everybody on the same page, right? I don't want it to be, hey, let's say yes, so Brandon's happy, or I don't want to say, let me flip sides if I was on the fence to be on Brandon's side to make sure that, you know, Brandon's happy or that, you know, the firm is happy or everybody's getting along. I want there to be tension. I want there to be disagreements. I want there to be, you know, times where I'm like, man, this dude's so stubborn or she's so, you know, whatever it may be, because that means we're all thinking for ourselves. We're all thinking on one accord and we're all thinking for the greater good of the people we're serving, right? Because at the end of the day, it's easy for, you know, me to be a partner in a firm and I'm, you know, ratio 3 to 1 and still going around and saying, no, I don't want to move forward with this investment. And so everybody's is listened to. Like I said, you first get the right people on the bus, and knowing that you have the right people on the bus gives me assurance that whatever decisions we make when we vote on whether we're moving forward with this deal or we're investing in this company or we're, securing this deal flow, it's just knowing that all these guys are in it for the captain partners. They're not in it for their own portfolio or for their own, interests. Everybody's trying to make this, because we're only raising less than $1 million for funds, right? Especially early on with no track record. Everybody wants to get to that $500 million raise. And we know that it starts now. Our track record now is going to propel us in 5-10 years to be able to be up there with the giants in this game and really be a big player. So that those decisions aren't easy, but at the same time, I don't want them to be easy. If they're easy, then one, everybody can do it, and two, it means I have a lot of yes men or yes women in the room, and that's probably not good either.
Very true. Speaking of everybody being able to do it, everybody can't do it. You guys target investors that are business executives, high net worth individuals, influencers, athletes, of course. Why?
It's a great question. Yeah. So I would say high net worth individuals, really, because those are people in your network who, one, trust you as a person, know you, you're credible to them, and they have access to capital that in this asset class they can afford to lose, right? Because it's high risk, high reward. And so that's why high net worth individuals. But then business executives, I think, come in from an operating sense. So if I invest in a technology company, and I know a business executive that has, worked in SaaS for 15 or 20 years and been the president of the company, or, whatever it may be, he has or she has viewpoints and other things that can, one, help us make the right decisions, but also help these companies that we invest in under, adding vertical value. And then the same with athletes, influencers. At the same time, you want to be able to add value vertically in these companies. So if I have a football player investing in a workout equipment company, he can then, or she can then post about it, or they can, add value by spreading that product to their teammates in the locker room or talking about it amongst their peers who are also athletes, and that can add value to these companies as well. So I think a mixture of all three of those is a great mixture to have as an LP base. And then we also can add vertically horizontal, or add value horizontally amongst each other, right? So I always think of big pictures and never really stopping at a goal, but always thinking there's more. So you think about Alex Rodriguez and the bid he did for the New York Mets. You look at that bid team, it's, Travis Kelce, it's DeMarco Murray, it's Bradley Beal. And so all these guys are, professional athletes, and they're not the most paid professional athletes. They didn't earn the highest amount of money in their career, but at the same time, they're able to invest in the Mets and get part ownership if this bid was to go through, because they have a relationship with Alex Rodriguez, however it may be. And so having that unique and rare or individual investor class for captain partners, I think, is paramount as well. So they can all, the businesses that can add value to the athletes, and the athletes can add value to the high net worth individuals, and we grow horizontally as well as vertically.
Hearing you speak, I am reminded of a show that was canceled, but that I really enjoy watching, multiple seasons.
What's that?
Do you know the show I'm about to? Are you serious? You have no idea what I'm about to say? Ballers.
Ballers, all right, cool.
Yeah. I'm thinking of Ballers, and I'm thinking of Spencer's character. Sorry, guys, if you guys don't know the show, it's canceled. You can catch up. The characters on the show, I'm thinking of Spencer and him having these clients, and his clients having this close relationship with him and trusting him with their money.
Right.
And I wonder, you've talked multiple times about reaching into your network, of athletes, of executives, but particularly athletes. Was there ever a time when you were forming this or putting this together that you kind of thought, this is like people's money, they're my friends, friends, family, business? They always say doesn't really mix.
Yeah, I've had, especially, so we closed our first deal as a firm September 4th this year. It's $250,000 we invested in one company, and that company was through our co-investment partners, and it was great deal flow. We had a lot of great cap table partners on that deal, and so we had a lot of confidence in this deal being something that will be beneficial for our LPs, our investors later on in life when this exits, whether that's 5 years, 10 years, and that was definitely a great jump starter for the firm. And so I talk about building track record, and me not coming from venture capital firm, and none of my partners coming from a venture capital firm, all having, experience in private equity, whatever it may be, but not having a track record and establishing that foundation early. One, we did it in that deal, but two, going to my investors, which are close relatives or relationships with me or people in my network, that was hard. And it was sometimes a feeling of uneasiness asking them to give me money or to invest in this company.
Sure.
Because they're investing, like I said, they're investing with no track record, they're investing in Brandon Chubb.
Mm-hmm.
And so knowing that the past 26 years of my life, I've done everything that I can to make my reputation, make my character, whatever it may be that of upstanding amount amongst my peers. It gives me ease knowing that I surrounded myself with the smartest people, use my network to get co-investment partners and great deal flow from these top VC funds, but also have, high quality deals with high quality cap table partners, right? So all four of those, being able to mix that together, eases those qualms a little bit. Obviously, you always go to bed knowing that this is other people's money, and you want to be responsible as you can with it. And so I, surrounded myself with the best team possible, the best, partners, whatever it may be, co-investment partners, and that is, something that eases that for me.
Definitely. With COVID happening right now, lots of light has been shined on riskier companies that have targeted NFL players specifically, other people as well, but we're talking athletes here. So NFL players specifically. And I know you have, outside of being in the league, done some work and been in and around like the NFLPA. And I kind of want to talk to you about why NFL players in particular are so interested in making their money work for them.
Right.
But also, what does the NFLPA do specifically to protect them when they're entering into these deals, or kind of warn them when they're about to enter into these deals so that it's not a big loss and impacts them?
And so I think to your first question, NFL players, athletes in general, are so interested in making their money work for them now because you realize the life cycle of this career, right? Especially NFL is a high contact sport, 100% injury rate. So you're going to get hurt. It's going to end one day. You can't play till you're 50, and you got to have a second career after that. Especially if you're not a quarterback, you're not a first round pick, if you're not a guy who got a mega $1 million extension. And so having that opportunity to one, leverage the shield, the NFL shield, while you have it, goes a long way, right? So it gets you into doors, it gets you into deals that you might not necessarily get. It gets you into endorsements. It gets you into just rooms in general, and really makes your brand go a longer way, makes your dollar stretch more. So having that and leveraging that while you can is important. But on the NFLPA side, athletes, you read about it all the time, and I read about it growing up, right? All these athletes going broke, and you think, oh, how can that be possible? They made millions and millions of dollars. They were in millions of, or they were in, hundreds of game-winning touchdowns or game-winning, highlights, and Super Bowls and Pro Bowls. And you got to realize that a lot of these athletes, surround themselves with people who might not have their best interest and might have interest for the short term and not the long term. And so that backfires. But I think the NFLPA has done a great job of, one, educating athletes, especially as rookies coming into the league, to be aware of, people who might not be in the best interest of them, right? Because they've seen it and done that and been on that road. But also just giving us access to, databases that have investors or financial advisors who are certified with the NFLPA, having agents who are certified with the NFLPA, and just, education, right? So being able to let guys know when something doesn't add up, or what to be aware of and what to be wary of. So I think that's a great, infrastructure that they set up, that athletes don't put themselves in those bad positions, and that the awareness is out there, and it's up to the athlete at that point. But NFLPA has done a great job. And like I said, athletes want to, cash out while they're hot. And you're the hottest when you're playing on Sundays. You're the hottest when you're in the playoffs. You're the hottest when you're catching touchdowns. And we know you can't do that for 45 years like you can be a investment banker or a Wall Street guy,
Definitely. And you touched on earlier being able to impact these places that you're investing in, these companies that you're investing in, both horizontally and vertically. Funny enough, I just read about you guys can tell I'm throwing curveballs here because every time I do, Brandon gets this look like. Funny enough, I just saw a mega superstar. I won't say the company's name that she partnered with, because no free promo over here.
Right.
But Beyonce partnered with an amazing workout company, which, is great in and of itself, promoting fitness and, being able to add Beyonce's fan base and ultimate influence. But she's also using that same influence to say, okay, we're partnering with this company.
Yeah.
This company needs to now invest back into not me, but a cause I care about, which her, have you read the story?
Yeah.
Okay.
You're good. This came out like 3 hours ago. So she's on top of it.
HBCUs. Invest back into HBCUs. I don't know if you guys can tell, but we're both of color. I'm Black, identify as Black. So I want to know, Captain Partners, you being a man of color, and, your partners and having diversity of that. You've mentioned, she a couple times, so I'm guessing your board is pretty diverse. How important is something like that to you when you're looking at investments, to be able to say, okay, the influencers can take this investment and not only profit from it through exit, but also profit from it by being able to bring this back to their community, albeit any community. It could be, a Caucasian community with, for disabilities, people, anything like that. How important is something like that?
No, it's huge. It is very important. 3 years ago, me and my brother started our own nonprofit, the Chubb. We do that to give back to kids in the community of Atlanta and Denver and our surrounding communities. So obviously giving back and uplifting our communities is important to us, right? We understood too much is given, much is required. We have an opportunity. We had opportunities growing up that a lot of kids don't have, and they can't help it, right? They can't ask to be born into a family that does X, Y, and Z, and vice versa. And so that's always a principle that was instilled in us at a young age. And so when I had my own opportunity to lead a firm to invest other people's money into companies, when you look at the statistics, less than 1% of VC funding goes to Black women, right? Less than 2% goes to Black people in general, right? And so you have this, or at least I take it upon myself as having this responsibility to make sure those people who are underrepresented in this asset class are represented, right? And then even investors, less than 2% of VC investors are minorities. So having athletes, generally athletes are majority minority, right? And so having these guys or these girls get access to great deals, which have high rewards, in the long term, it's in a liquid investment, but giving them access to great deals with great cap table partners, with people who've done this and had great exits and can really spot deals and really uplift the company, but also being able to go through deal flow and see the kind of founders, the management teams, the gender diversity, the ethnic diversity on these teams, on these boards, and being able to give back that way as well, right? And it's not giving back. I shouldn't say give back because it's not a charity thing. It's, I believe in you. I see it in my culture all the time. I see why this can be a great idea, a great company. And I know that Kaufman Fellows did a study that minority-led teams on average have a higher return than all white teams or all white founding teams, or gender diverse teams have a higher return profile than all white teams, right? So being able to see that, and especially as an emerging fund manager, I'm subject to more diversity, right? Because, more established VC funds are usually homogeneous. They're usually all white and it's usually male. And that's not a problem, but me being able to diversify that, have women on our team, have minorities as our partners, being able to see the world differently and know, in my culture, this works. In my community, this could be something great that a lot of people who aren't from this culture, aren't from this community, can identify. And they won't get it. And it might seem crazy to them, but at the same time, it's a great idea. And having more Black fund managers, I think, lends itself to more diversity in startups and more diversity in venture capital. So paying it forward, but also being able to reap the rewards from it, 30% higher rewards, actually, according to Kaufman Fellows. But I think that's important. And I'm in a position where I can do that. So I'm going to do that, right? And so I don't just invest in a certain color or a certain gender, but I'm inclusive. I see it all, right? I see it as this person is on the same playing field as this person, no matter their skin color, no matter their gender, no matter their, whatever it may be. As long as they have that experience, as long as they have that great idea, that great support system, those great resources, they can get funding from us if it makes sense.
You heard it here first. I don't care what you look like, as long as the idea pan out.
Right. So I mean,
you got to add up. The math has to math. You guys.
Yeah. Right.
So talk to me about, those great ideas. You invest in technology companies that are consumer facing in the sports and media entertainment industry. Why?
It goes back to our LP base, right? So adding vertical value into these underlying companies we invest in, if they're consumer facing, I can do an Instagram post about it, or they can do an Instagram post about it. They can do a meet and greet and help, uplift this company, whatever it may be, appearance. So it's basically an endorsement deal, but with equity. That's kind of how I see it, right? Instead of it being a one-off, and now X player or X athlete did 31 offs and nobody believes anything they advertise anymore or endorse anymore because they're just doing it for a quick check, a short-term gain. I'm putting skin in the game as an athlete. So I have more interest to uplift this company than I would if they were just giving me a check. And so that goes a long way, because especially with startups, they have a higher need for capital. Customer acquisition cost is high. And so getting free, or not free, but equity customer acquisition costs, I think, is a more sustainable solution, more reliable solution. You see with HyperIce, they just got a $700 million valuation. The list of investors is, 15 of them: Larry Fitzgerald, Christian McCaffrey, all these guys. Same with Whoop, the fitness strap. They just got $100 million or $100 million raise on a $1 billion valuation. So now they're a unicorn, and their list of investors is Pat Mahomes. And so being able to give athletes access to great deals like these, and allow them to, one, uplift these brands with their own brand, but also give them access, even if you're not a Pat Mahomes, even if you're not a Christian McCaffrey, but you have the access to capital to allocate to this investment class. That's kind of our niche and what we're focusing on. And then I say the same thing with business execs. You got guys who come from, high ranking Fortune 500 companies who have operator experience or have connections in this space, that if I have a SaaS consumer facing company or whatever it may be, they can add value through their networks to help these founders who don't really know anybody, don't really know much, and really have to spend a lot of money to get to know these people. They can do it more through a equity based incentive. And for the founder, it's a small percentage, right? But for the investor, to them, it's a big deal, and that percentage can be a bigger piece of the pie long term if everything goes right.
Definitely. One thing that we talked about, the entertainment media industry, and how you're kind of working Captain Partners into that. Why is it that it's this trend? I don't know if you've seen this show called The Shop. Kevin Durant had Boardroom. And Steph Curry has his own production company. Why is content a thing that athletes in particular are really going after and investing in? And even if it's not their own shows, but investing in other people's content. Why is content such a heavy thing?
I think content's a big thing. One, because as a brand, you can, it's basically what I just said. You can uplift the underlying asset by having your brand attached to it, right? So when you think of The Shop, I'm gonna watch. If I'm a kid who loves LeBron James or loves NBA basketball or loves whatever, I'm gonna watch The Shop because LeBron's on it, and his network of people he brings onto, like Obama was on it, people that you necessarily don't get in the same room, because LeBron's able to, use his platform to kind of bridge that gap and aggregate all those people. It uplifts The Shop. It uplifts the boardroom when Kevin Durant gets the founder of Whoop, who I just said was a unicorn now, on there, who necessarily wouldn't be on a show like that, and using those brands to kind of uplift and really get more personal with the athlete. Now I feel more attached to LeBron because I hear him outside of an NBA court. I hear him outside of a press room post game. I hear him just relaxing in a shop, getting his haircut. Or I see Kevin Durant let me get into the inside of what his Monday weekly business meetings are like with his team and his agents, and what they really go down and what they talk about and how those conversations go. So it gives you more access and makes you feel more attached to these players. And for these players on their side, from a financial side, it really pays off.
And I think, you mentioned, you kind of tied that into what Captain Partner does, because when your clients are able to kind of make that endorsement, it does the same. If I see that, one of your clients, who just so happens to be one of my favorite players, is endorsing this fitness thing,
Mm-hmm.
I might not use the fitness
Right.
thing, but I'll probably go buy it.
Right. Exactly. Or
You know?
you might not go buy it, but you'll talk about it amongst your circle. And
Definitely.
one of your peers might go buy it. And it goes the same way for that athlete. One of his or her peers might go buy it because they're able to talk about it in the locker room now. And it goes back to just dilution. When you think of a equity investment, I can't have 30 equity investments in fitness, right? It's just not enough supply to do that. And I don't have enough supply of capital to make it a significant impact. But at the same time, if I'm doing endorsement deals with every sports brand and every sports drink, that can add up to 30 like that, and everybody just writing me $100,000 check. And yeah, that, pays off in the short term. But at the same time, my fan base is starting to realize that I'm just diluting my brand by, doing one-off deals. And then for the underlying companies that are making these endorsements, their ROI is terrible, the longer they're in it. So being able to build up a brand through equity is huge. And so giving athletes access to do this, I tell athletes all the time, and me being athlete as well, no matter how many touchdowns, how many field goals, how many slam dunks, how many home runs, you can't just go hop into Tesla and invest, right?
Yeah.
It's a supply and demand problem. Everybody wants to invest in Tesla. Only a select few get to invest because of, they can't accept every dollar in the world. And those select few are usually people in that network of who invested when Tesla was, a no name. People who are friends of people who invested in Tesla. People who are friends of the companies that are in there. So or the funds that are invested into it. So it's also a supply and demand problem. And me using my network to build up that access to these deals and getting great deal flow from my co-investment partners, getting great deal flow from investing in Artie and being able to have founder fund deal flow and have all these other great companies who invest in high quality deals and have done it consistently for years.
Talk about Artie.
Mm-hmm.
Just gave me the perfect segue.
Mm-hmm.
Talk to me about Artie, and talk to me about what research went into you guys making the jump and making the leap into investing into Artie.
Yeah. So
first off, what is Artie?
Artie is a game engine platform. Is mobile game engine platform that does instant play, but also uses proprietary technology that they developed to kind of make these games more interactive. So it kind of really bridges the gap from virtual reality to now, because virtual reality has a chicken and the egg problem, right? It's not enough demand to spend all this money as a developer to build virtual reality. And then from a developer or from a consumer standpoint, it's not enough good virtual reality content for me to be a consumer and want to spend my dollars there.
Definitely.
And so Artie really uses that kind of AR virtual reality technology, puts it on a mobile gaming platform, and kind of bridges that gap so we can eliminate that chicken and the egg problem and ease consumers into virtual reality in the future. But right now, I mean, their game engine platform is going to be like no other, right? It circumvents the app store. It does a lot of things that developers will like, but also consumers. It eliminates a lot of friction. So we're excited about that deal. We got that through me making a relationship with one of our co-investment partners, who's a top VC fund and a respected player in the industry. And they, offered that deal to us, and we did our due diligence on it as a talked to the founder multiple times and really just use our backgrounds of our experience to realize if this was a good deal or not, and we invested. And we did that through an SPV. And so it goes back to track record. I said earlier that you got to have a track record to basically say, hey, I did X, Y, and Z. This is why you should give me X, Y, and Z, right? And so we didn't have that. So a lot of this is a great deal. We had to sell the cap table partners. We had to sell the co-investment partner, and we just had to sell ourselves. And so we did it through an SPV, a special purpose vehicle, instead of doing it in a fund, because we wanted to be transparent. I wanted to let you know, hey, you, the investor, this is exactly what you're putting your money into. I know I haven't proven this before, but I'm telling you, I believe in it. My team believes in it. And I want you to believe in it too before you hand those dollars over. But two, you can get a track record a little faster, because once they go, it's one company. Once they go to their next funding round, you could do the math and kind of evaluate that your initial investment to what it is to date. So that opportunity is what we're excited about. We raised $250,000, 6 investors. Out of the 6, 4 were minorities, 3 were athletes. So to a great start, proof of concept as well. So now we're raising a fund Q1 of 2020 or 2021, and we're going to invest in 20 to 30 companies. So get more diversity in, as far as our portfolio of companies, instead of just doing one company, multiple.
How long does it typically take to do your due diligence on a company that you're interested
Yeah,
in?
that's a great question. For us, as an emerging company, emerging fund, it took us, 2 or 3 months, and then it took us another 1 or 2 months to raise that capital. But once we get a well-oiled machine, I think this due diligence can happen in under 6 weeks for each company we decide to invest in.
I mean, 2 to 3 months doesn't sound that bad to me, honestly, because I'm just thinking about money and like
Yeah.
if you're not sure whether you
Right,
want to
right.
jump into
Mhm.
something, 2 to 3 months doesn't sound bad. It makes me think you're taking your time, you're not
Right.
rushing it. I like
As an
it.
investor, yeah, you love
Yeah.
that. But from our standpoint, your goal is to see 100 deals a month, right? So when you're thinking about, 25 deals a week, that 2 to 3 months really has to get cut in half, right? To be able to fit that window of when these companies are taking money and funding, so you don't miss out, especially if it's a great opportunity. So being able to streamline that process and become a well-oiled machine is what we've been working on and what we're in the process of now.
I like the idea of arty because gaming right now, it's just like
Yeah.
over the past few years has been taking like with this it's in college,
Hmm.
like they have like teams and
Yeah.
like it's just like
Right.
crazy. So to think where it could go and then when adding in
Right.
VR and AR into it, especially with COVID, I know that's lit a fire under a lot of
Yeah.
different people. I mean, you think about, Facebook and Oculus and,
Hmm.
all these different
Right.
platforms merging together to upgrade the
Right.
experience, but they haven't made it affordable for everyone.
Right.
So like if you don't know about like a Google Cardboard or something like
Hmm.
that to be able to kind of get into it,
Right.
you're thinking that the entryway as just a consumer is $400.
Hmm.
So I love the idea of that and
Right.
making it, more
Right. Because
public.
who's gonna pay $400 if the content is something I could do on my, PlayStation 2, right? It's not good content. That four hundred
Not
dollars is
me.
that $400 is not going to happen, right? So a deal we're really excited about, and it obviously is way more to Artie than what I just kind of gave a vanilla
Sure.
answer, but for our audience, but it's something we're real excited about. It's something we really studied hard and really put a lot of our faith in. So.
What else are you kind of, or can you say like what else you're kind of looking at, or what would be your dream investment? What would be the dream investment for Captain Partners to be able to bring to their clients?
Yeah, so I mean, the dream investment would be something like a company like Whoop, right? They
Mm-hmm.
just want unicorn status, but also I'm a consumer of Whoop. They have partnerships with a lot of leagues like the NFL, the PGA, and it's something that athletes really, really love. Very data analytic wise, but also something that an everyday consumer, the weekend warrior, the business exec can wear and really get useful information and useful utility out of. So a company like Whoop that's consumer facing in the sports industry, and really is a one size fit all for every type of consumer, and very groundbreaking, right? Innovative, and nothing out there like it right now. So obviously that's a little too late on that end, but there will be more companies like that. History repeats itself. So just being able to get great deal flow and associate ourselves with great partners so that we can get into the opportunity, the next Whoop or the next whatever it may be when it comes.
I love that name Whoop. Like it
Yeah.
reminds me of. Do you know what I'm about to say?
The Whoop, there it is.
No, it reminds
Uh,
me of Whoop Whoop. Do you watch
uh,
Insecure? Oh my gosh, you
uh-uh.
gotta watch Insecure. Okay, now that you've heard that, Whoop Whoop, you gotta like watch. Like if you just type that in and put Insecure, I'm sure you'll see it. But it's very on brand for what we're talking about right now. Okay, so I have a question from Troy.
Hmm.
We'll circle back to us in a sec, but I want to get some questions from the
Yep.
audience. There are many athletes turned investors right now. Are there other athletes that have had similar paths or mentors that have guided you?
Yeah, that's a great question. I think Brandon Copeland is a great example. A lot of people who are familiar with sports, football, NFL, Brandon Copeland is a New England Patriot right now. When I came into the league as a rookie, we were on the Detroit Lions together, and Brandon is a financial professor at UPenn. He was a
Oh,
UPenn
okay.
guy, so now he has a financial professor or class at University of Pennsylvania. But he also does a lot of financial teaching for NFLPA, for just education for guys, and how to really make our money straight or stretch, and allocate our dollars the best way possible. So Brandon's a great guy to follow. Kelvin Beacham is another one. So I mentioned Whoop and being able to invest in Whoop. Kevin Beacham actually was had the opportunity to invest in Whoop, and got access to that deal a few years back, and does a lot of good investments. That is, I think, a poster child for investing as an NFL player or athlete in general, right? Getting access to top funds, getting access to great deals through these top funds because of your platform, right? You're an NFL player. People want to be around you. People want to, say I met you or, have a picture with you or say I helped him do this, X, Y, and Z. And so Kevin knew that and really, really leveraged that.
I love that. What are you most excited about in regards to the Atlanta startup scene? And this is from Anita. Hey, girl.
Nita, I think Atlanta is a great community for these startups, right? One, because of just the resources we have in Atlanta, the community, the culture, and being able to amplify that and really understand that, right? From a VC perspective, looking at companies and knowing their potential just because of how I grew up and what I see in my eyes as a black man and a Atlanta native, and you don't understand that in Silicon Valley, right?
Yes.
Because you probably don't come from that, or you don't understand that in Boston or New York. But being able to cultivate our own ecosystem of startups and founders who who are underrepresented, but also have high potential and great ideas, and being able to service them as a VC is important. It's something I'm excited about.
I was going to ask you, as an Atlanta native, seeing this scene kind of transform, was there ever a thought like, oh man, I'm going to have to go out to Silicon Valley, or oh, I'm going to have to go to New York before this kind of popped off here?
So that's a great question. Being able to get experience over the past 3 or 4 years with this before I actually did it on my own, I realized that, especially in 2020, the technology is there, right? Where I can hop on a Zoom and do everything I would do on the Zoom that I would do in your office in Silicon Valley on on Manila Street. But being able to have the network, right, that stretches just beyond geographical, and something that I've been curating and cultivating for a while, and so I have the ability to know people in New York, know people in Silicon Valley without having to go fly out there and meet them at a networking event or the Silicon Valley scene or the startup pitch community. Right? I can pick up the phone. I could pick up Twitter. I could pick up whatever, the email them and be able to reach the same network. So that's an advantage I think I have as a fund manager, is just being able to pick up the phone and a lot of people answer, and having those people's number in the first place for them to answer, right? Or having access to these people. So that never really crossed my mind just because of that. And thankfully Atlanta is building that here as well. So now it's in my backyard. So, have I guess a sneak peek or early access to it at this point. So
Definitely. And shout out to a company like Comcast that even invest
yeah,
in something
it's
like
huge.
this.
Yeah.
It's really big. And I think I asked that question even more so for the people who know that Georgia is not just Atlanta, and then
Yeah.
there's people in those smaller counties
Mm-hmm.
out there that might want to delve into this world, but they
Right.
think I have to move. You know,
Right.
do you think they even have to move to Atlanta or?
Um, I mean, probably in Atlanta just because of the community from an entrepreneur standpoint, a startup founder. You need all the resources you can get, all the help you can get. So being in an ecosystem that provides that and kind of uplifts that and really meeting like-minded people, I think will help their network tremendously. Just because every entrepreneur knows another entrepreneur, right? Entrepreneurs don't hang out with people who are not like-minded. So even if, and they told me this before, if an entrepreneur fails, if you like that entrepreneur, keep up with that person, because they're liable to make another product or make another company later down the road that might be something of success if the first one wasn't. So
Okay, I have something from Samuel, who says, "Loved ballers." Me too. Are there any parallels from being a football star to being an investor?
that's a great question.
You've been given sports analogies throughout, so just throw something out there.
I think as a football player, you fail a lot. So a unique thing about being an athlete, we have this thing called meetings. So every day before practice and after practice, we meet, and we're not meeting to ask how each other's day was. We're meeting and watching exactly what we did on the practice field that day before, or the game before the day, the game the day before. or the same day, you know, right after practice. So you get criticized every day. You're used to taking, not even constructive criticism. You're used to taking criticism and really having to go back out and perform. And so as investing, one, you understand when talking to a founder, when talking to a managing team, those who can really fail and get back on their high horse and act like nothing happened, right? Football, we always talk about having short-term memory. So from any football plans or any football fans, if you're watching a game and a cornerback gets beat, gets burnt, or, you know, gets trucked, or, you know, a linebacker misses a tackle, they can't sit there and dwell on that for 2 quarters. They got to act like it didn't happen, or else it will happen again, right? Because they'll be in their own head and they won't be able to react and think clearly. So as an investor, you look for that same quality in founding teams and entrepreneurs, and really wanting to know that they're able to take a no from a VC and still know that their idea or their company is worth, you know, $1 billion, and still act like that, right? They'll have that confidence and really just wake up because you're going to take a lot of hits and punches as an entrepreneur, especially with a startup. And a lot of people are going to tell you no. A lot of people are going to tell you your idea is stupid. A lot of people are going to tell you you don't have it. And so you got to be able to internally take that criticism and roll with the punches.
I've, you know, never been hit by like a moving car, like they say it is, like on a football field. But a lot of the no's as an entrepreneur, I imagine, feel similar to being hit by, you know, tackled to the ground by a 200-pound person. So you have goals as an NFL player. I'm just going to throw it out there and assume that that goal is to win a Super Bowl. Maybe not, but I'm going to think that, you know, is the main goal. What is your goal, return on investment as an investor or a funds manager or someone who is working with other people's money? What is your overall goal for them, for a client?
Right. So, I mean,
does it vary for each person?
Well, right. I mean, venture capitals, all these, especially Series A, seed investments, all these are very illiquid, meaning you're not going to expect returns as an investor for 5 to 10 years, right? Your money's locked up. But at the same time, to compensate for that, your returns are usually, you know, astronomically higher than it would be in a non-illiquid investment, aka the stock market, where you can put your money in one day, take it out the very next day if you're feeling uneasy or you got a big a jump or spike. So being able to outperform the stock market by a significant amount is obviously a goal for all our deals, because as an investor, you're giving us your money because you want those higher returns, right? So being able to in history shows us on average, venture capital outperforms the S&P 500 tremendously, especially longer term, the longer your money's out there, illiquid. But also, you know, venture capital is the highest risk asset class, but it also is the highest rewarding asset class. So being able to capitalize on that and make sure you're in great deals, quality deals, and great investments, I think is paramount. So I don't really put a number to our returns, because I could tell you 20% ROI. Let's do it. You're going to give me your money right away, and then that 20% is 7% ROI. You still got to return on your investment, but at the same time, that 13% is pissing you off. But any other day, if I just didn't tell you any, you know, return, and you got a 7% ROI or 15% ROI, you're ecstatic, right? Your money is, you know, if I do 3x MOIC, multiple invested capital, you're pumped. But if I told you 10x when you gave me the money, you would be pissed. So it's not something we put a number on. We just strive to have the highest quality returns, and, you know, being able to return money to people who are underrepresented in this asset class. Like I said, less than 2% of investors in venture capital are minorities. So being able to put money back generationally into their pockets as well is paramount, because that's people who look like me. That's people who I grew up with. That's people who are my family members that I know don't benefit from this, but could if they had the right structural constructs for it. So,
you talked about it a little bit, but is that the reason why, you know, it was like the best decision for Captain Partners to primarily invest in seed Series A companies?
Yeah. So with that's a great question. We invest in seed to Series A, one, because your check size, right? Your money stretches a little longer. in a lower valuation. So if it's like the deal we just invested in was a $20 million valuation, in 2 years when they're a Series B, we're hoping that 20 million is now a $100 million valuation.
Definitely.
So it's going to take a lot more money to get an equity percentage that's significant in a $100 million valuation. Two, there's a trend right now that companies are staying private longer. So they're staying in private markets longer, and they're not IPOing. One, because it costs a lot of money to IPO. Two, because a lot of startups, a lot of companies are not capital intensive no more because of software. If I don't know, Microsoft took servers that took two warehouses to a house when they started the company. Right now, a SaaS company can can start a company through Amazon Web Series and have no startup costs as far as infrastructure, right? So you have a cheaper startup cost for a SaaS company, so you don't need to go public to get money from public markets. And so when companies stay private longer, one, a lot of wealth is created in the private market, but two, a lot of late stage investing. So now they're doing Series Ds, they're doing Series Es, and so there's a lot of allocation to those rounds. But at the same time, there's no longer any reward because there's no risk. If I'm investing in Uber while they're still private in 2019, there's no risk to investing in Uber. Everybody knows, at this point. So you know what I mean? It's kind of like you're just investing to say you invest. Whereas a Series A, Series A and seed, one is riskier, but you're going to reap those risks. If I invest in Uber when nobody cares about Uber, when everybody's saying Uber is a stupid idea, and then 10 years later, bam, my Series A or seed stage funding, it was a smaller check size, but now it's worth a lot more because I 100x my money. And so companies staying private longer is another reason. But then to that, having access, because there's limited capacity in Series A and C stage companies now because of companies staying private longer. We have access with co-investment partners that give us great deal flow that allow us to still reap these high risk, high reward ratioed type of companies. And then also just being able to see a company through from origin to finish and exit is huge. So when I say companies stay private longer, a lot of wealth is created in the private market. So you think about Amazon IPO'd after 3 years. So their market cap when they IPO'd was X amount of money. So a lot of that market cap and a lot of that wealth creation was seen by people who bought their stock. Whereas Google, Facebook, I think Uber, they all took longer to IPO. So a lot of that market cap when they were $30 billion companies was all created as in the private market. So people who invested in their Series A companies or C stage rounds reap those benefits. So that's two of the main reasons.
And we are wrapping up here. So if you have any good questions, make sure you're sending them over. Why should the average startup founder or VC capital firm care about a fund that targets pro athlete investors?
Yeah, that's a great question. One, because as you see with Hyper Ice, as you see with Whoop, as you see with Peloton, and all these other companies, athletes and athletes as equity owners creates a lot of value, right, for your company, especially when it comes to startup costs, customer acquisition costs, whatever it may be. Athletes have aligned interest with the company, so they can uplift the company in a tangential way, and that goes a long way, especially for a startup or a company who is burning through cash for other things, whether that's talent, whether that's through infrastructure, product, whatever, customer or not customer acquisition costs, but COGS. So that's huge, and athletes are tangential to that success, and so you see that all the time. And then two, just athletes as a whole don't have access to this. So being able to have entrepreneurs who don't have access to athletes, right, who weren't athletes themselves or don't know any athletes, and being able to give them access to these business execs or people who can help their companies, and then for the athletes, giving access to venture capital where you're usually shut out the game because you just don't have that pipeline, I think is huge as well. So putting two and two together is what we're trying to do.
Yeah, like act as a bridge almost.
Yeah.
Aaron asks, across the various subsectors of sports tech, high school focused, college athlete focused, professional sports, esports, hardware, etc., how do you think about your areas of particular interest or potential avoidance for 2021 and beyond?
That was a big question. Can you ask that again?
It was, yeah. Across the various subsectors of sports tech.
Yep.
How do you think about your areas of particular interest um, or avoidance for, you talked about 2021 and beyond?
Yeah. Um, so that's a great question. We see it as, where can we add value? That's the first thing we ask is, can we add value? If that's a no, then we have no business investing in it. Because like I said, we're investing at smaller check sizes. So our money's not going to break the bank. It's not going to, put a dent in these companies. So at the same time, we got to add value in another way. And we got to win these deals. What's gonna have the next Uber, the next Facebook want us to be a part of it, when everybody, like I told you about the supply and demand, everybody's trying to get into that deal. So what is going to be our special sauce? What's going to be our secret sauce, and why do we win this deal? Why do we get access to it, and why does the founder want us to be a part of it? And then two, thinking about sports tech, you think about the trends, right? And as athletes and people with that background and seen and can use the products and been consumers of the products and been the kind of the guinea pigs of the products, where do we see this going, right, in our own lives? Where do we see us being a factor as far as, do we believe in this product? Do we believe in this direction of the company? Do we believe in this industry? Because if we don't, then how can we even be advocates for it, right? How can we uplift and use our whole ethos and thesis for these companies if we don't see ourselves playing a big part in it? And then that goes into believing that this could be a big thing, or if we think this will be something that we've seen not pan out in the past, why, I guess, subject our LPs to that?
Definitely. And I think, that question ties into one of my last questions for you, because I know we're about to get kicked out soon. Why should a pro athlete want to be a part of Captain Partners? You've talked so authentically about your experience and your experience working with athletes. Why is that something that they should want to look to you guys for to help them with the Captain Partners?
Well, I think sports is a huge industry, and it has a lot of market value, right? And so we're entering a stage where sports is so paramount to kind of value creation and wealth creation. And so what other way to help these athletes create wealth than through themselves, right? So usually when you think of creating wealth and generational wealth, you think of institutional endowments, pension funds, whatever it may be. But that doesn't give back to the people who are in your position, usually minorities or whatever it may be. And so being able to create value through sports in general, especially as an athlete, you're really just giving back to your ecosystem, right? And really putting money back in your communities, putting money back into value creating your ecosystem. And I think that's very important, right? Because people who are athletes or tangential to athletes are the ones who are creating all this value. Why not reap what you sow and put those dollars back in your pocket through equity investments and companies, and that's what we give them access to, and that's what we try to build around Captain Partners, and really construct our deal flow, our investing, and just our networks in general to all surround and encompass that value creating for these individual LPs, and really just the larger ecosystem in itself.
And you're not, I want to hammer this point home too, you're not athlete exclusive.
No, not at all.
High net worth social influencers or influencers as well, correct?
Yep. Business executives, and really we're taking institutional capital as well, but having like I said, our first deal, 50% of our investors are athletes. And so not all our investors are athletes, but having guys who are a part of this and build with us and really reap the benefits of these high rewards, and through their own kind of tangential brands that are aligning with these companies and really uplifting these companies. It's kind of a double whammy, right? You can not only reap the rewards and benefit and invest, but you can benefit based off of how aligned you are with this company as well. And so we're bridging that gap and really playing matchmaker for these companies, and allowing them to reach out a hand to us, and we bring our network to the table, whether that's influencer connections, or making a connection with a business executive who may have operating experience, or may have advice to help this entrepreneur, this founder steer the right direction or go to market right. So
Definitely. Before we get out of here, plug your socials,
Yeah,
especially the
cool. Yeah.
Captain Partner socials.
So you can find us on Instagram at Captain Partners, on Twitter at CAPTN Partners, and then me personally at Instagram at Chubb, and then on Twitter at the number four, and then Ocho. And so Captain Partners, both of our social channels, update you on a lot of our deal flow, a lot of our progress, and what we're thinking and what we're doing, right, and just the trends in the industry. And myself on my personal channels, I'll do the same. And then our website is also captainpartners.com, and that way you can see more about our thesis, our investment criteria, and our previous deals, and kind of what we did in our Captain Fund SPV, but also what we're doing in our upcoming Captain Fund.
Before we get out of here, I was just throwing another question from the audience. So I guess we're not getting cut off just yet, guys. Alex asks, Brandon, as a former college athlete, what impact do you feel that sports tech will have on college athletics with the industry shifting towards a new NLI wave where athletes can now monetize their likeness?
Yeah, it'll be huge, right? Because what you just said with the national letter of intent, being able to have likeness compensate these athletes and really take the power. These athletes take the power in their own hands, right? And so they build their own brands and benefit from it through collegiate sports. I think sports tech will be huge. So you take a company, an analytic data company like Woot, right? So it's a wrist strap you wear, and it tells you your sleep, your recovery, your strain that day, how many calories you burn. And so as an athlete, I can use that from my likeness to see how X player at University of Texas recovers, or how the quarterback at Georgia trains in the off season, or what he does weekly, and how that performance on that Saturday game affected or was benefited from his recovery or his sleep score or his calorie strain. And then for coaches, right, being able to use this information to not only benefit the players but as a recruiting pitch. We have the best training facility that we just spent $140 million on, but there's no tangible result besides the fact that it looks nice and has a putt green and has a slide, and the locker rooms have TVs in it. Well, now you can say, hey, well, these athletes get the best nutrition. We have a recovery center, and all this stuff you spent money on. You can really show those data and analytic points, and use that from an NIL standpoint, from a recruiting, from letting kids know that, one, you could benefit from this as a brand if you build your brand as a kid, but also to come here, right? Why would I want to come to this school versus this school? And they're both recruiting me. They're both came to my high school. And so just being able to use that and really use sports tech. And that's Whoop. I gave an example. I'm not saying that's happening, but, just spinning my wheels here. That's one way I can see that happening. And it's a lot of companies who do this, right? A lot of data analytic companies, a lot of companies like the sleep mattress, 8 Sleep, and so forth and so on. So the possibilities are endless. And but those are two examples to your question about sports tech and the NIL, and being able to, profit off your image and likeness, especially as a high profile college athlete. Instead of waiting for that third or fourth year when you go pro, you can do it as a freshman. These freshmen now come into college with 150,000 followers, which when I was coming into college in 2011, Instagram had just started, and it was just a filter app, right? You just took a picture, used their filter, and then posted it on Facebook. So it's huge, and the opportunities are endless, and I'm excited to see how that pans out in the future.
Brandon, you out here dropping dates, telling our age. I already said we in the same age group. Oh, you can't do that. But yeah, I think about that, and I think about Zion, and how he came in off the gate with a whole bunch of followers.
Yeah.
And it makes you think, like, wow, if I was born in a different generation, right. Not dating myself here, how I could watch these athletes really, I think I came up when John Wall was, still playing college ball, right. Super popular, and he had like the whole dance and everything. And I wonder how he would have been able to benefit from that if we were there from then now, Brian's going to kill me, but he told me we're really popular. I have another question. Last one. Marjan, I hope I'm saying this correctly, asks, would you invest in grassroots sport organizations outside of the U.S.? Would Captain Partners partake in something like that outside of the U.S.?
Yeah, I mean, there's definitely a possibility. I don't want to say yes or no, but obviously, as a nascent firm, we first got to lock down our own territory, right, in the United States, and and geographically where we can actually add value. Football, NFL especially, is huge in London. You Before pandemic, you obviously noticed the 4 or 5 London games the NFL played every year. They were in talks, literally heating up right before the pandemic hit, about a team actually going to London. And so I actually had the opportunity to go with the NFLPA to London in 2019, summer 2019. So there's a lot of grassroots sports leagues and foundations that the NFL is really cultivating in London to, one, introduce them to football and the understanding the the actual rules and nuances of the game, so that these young fans or young kids can become, lifelong fans, and especially be ready when the team comes. But I think that's something that's a challenge, right? Because of geographical locations and not being able to, who's to say X running back on the, Patriots is popular in London like they are in the United States, and does that model still work as far as equity ownership as an endorser? So you just have to see how that plays out. We would just have to see how that plays out, and obviously that, like I said, is a possibility long term. But right now we're really just trying to get off the ground here and make sure we check every box before we jump the pond or cross the ocean. But great question, and I think you'll see a lot of funds and firms do that in the future, if not, currently. I think the pandemic obviously put a wrench in everybody's uh, momentum, if that was in the works, but we'll see that happening soon.
I imagine there being like maybe a different level of entry or a higher barrier of entry, um, to like you said, cross seas as well, correct? Just
Yeah.
outside of just the social pull aspect of
Hmm.
it. So it's very interesting. That's
Yeah.
interesting to think
Even
about.
like overseas, right? The bigger sports aren't necessarily the biggest sports here.
Hmm.
And so, you think of, Europe Premier League, and then here MLS is,
Hmm.
there's levels to it, right? And
Hmm.
then vice versa. There's no football outside of the United States, or, overseas basketball isn't the same as NBA. NBA is still big in other countries, but
Definitely.
baseball is, cricket is not, so
Yeah,
I could go
Formula
on.
One,
Yeah,
like
exactly.
yeah,
Yeah,
it's yeah.
Formula One versus NASCAR is a lot, a lot of different differences. So being able to, one, master what you're good at now, and then work towards other things. But we got to master this first.
Yes, step one, guys. Don't rush us.
Great question though.
Definitely. Can you throw socials at them one more time before we get up out of here?
Yeah. So Captain Partners, our Instagram is at Captain Partners. Our Twitter is at CAPTN Partners. And then my personal social on Instagram is at Chubb. And then on Twitter is at the number 4 Ocho. So 4 Ocho, my football number in college was 48. So those are my socials.
Um, Shay Rodriguez again, you guys. So on Instagram, I'm at Shay Style, and if you can find me on Twitter, good luck. I welcome you to follow me. I want to thank, before we get out of here, the audience members that asked those
Yeah,
amazing questions:
great.
Troy, Anita, Samuel, Aaron, Alex, Marjan. Thank you guys so much for participating in the conversation, and thank you again, Comcast and Atlanta Startup Week. This has been amazing. Thank you
Yeah,
for inviting
no
me
problem. And
here to even talk to you.
I appreciate you coming and being a great moderator and having great questions for our guests. Obviously, I want to make sure we get our message out, but also just the ecosystem of athletes investing in tech and why that's important. Just sports in general, like I said, is a huge uh, value creation that's available, and I think athletes can be the influencers and the drivers of that value creation by using themselves and really being able to uplift these companies portfolio wise through equity endorsements.
Definitely.
So excited about the future. Captain Partners is something that is near and dear to my heart. We surrounded ourselves with great people, great network of athletes as well, and just building from there and really moving the ball to create as much value for our LPs as possible, and but also our communities, right? And having that eye where I don't just see one type of founder or one type of founding team, but being inclusive and really making sure those who are underrepresented get represented by us as well. So excited. Yeah.
Inclusivity gets the bag, man.
Yeah.
It does.
Yeah.
And we're learning that, and as we go,
Right.
it's only going to get better and better, and
Right.
the bags are going to get bigger and bigger.
Right.
So
So
thank you, Captain
thank
Partners,
you
for having
guys.
me.